Are we on the brink of a transformative moment for cryptocurrencies as we approach 2024? There's a lot buzzing around Bitcoin and its potential in today's climate.
Absolutely. We'll break down the urgency surrounding upcoming rate cuts and how political dynamics, especially involving figures such as Kamala Harris, could impact the crypto landscape.
We also have insights from George Tung on Bitcoin's potential recovery patterns amid these changes. Welcome to Financial Insights in Minutes, your go-to source for concise summaries of significant financial news.
Today, we'll summarize critical videos that shed light on these pivotal developments in cryptocurrency. Stay tuned as we dive into each topic and reveal the expert insights that will help you navigate this dynamic market.
Let's dive right in. Today's hot topic is cryptocurrency policies in light of upcoming rate cuts and the September market trends.
Here's the scoop. With Kamala Harris making strides in crypto policy, we're gearing up for a pivotal moment. But what's really at stake for crypto investors?
What's the main idea we're exploring today regarding Bitcoin?
The core thesis suggests that September rate cuts often correlate with market downturns, historically signaling tough times for Bitcoin. But there's more. With shifts in political support, how will this impact prices?
Let's break down those key points, starting with the impact of rate cuts.
Exactly. Rate cuts in September have a track record of triggering market volatility. It's a red flag for Bitcoin stability.
Now, how does Kamala Harris fit into this equation?
Great question. Harris's campaign is actively engaging with crypto policies, a first step that could significantly change the game for investors.
What's the forecast for Bitcoin as we move into September?
Historically, September has been less than friendly for Bitcoin. Investors are advised to prepare for potential liquidity crises as the month unfolds.
So, what predictions do the experts foresee for the crypto market?
Expect significant volatility, especially as we near those September rate cuts. It's a classic case of bracing for impact.
And what about the political landscape's effect on crypto?
Political shifts can dramatically affect investor confidence. A Trump election win might usher in pro-crypto regulations, influencing markets positively.
To wrap things up, what are the essential takeaways for our crypto enthusiasts?
It's all about vigilance. With September rate cuts possibly causing havoc, staying informed on political shifts is crucial for your investing strategies.
What do you think will happen to Bitcoin if those rate cuts occur? Share your thoughts.
Absolutely. Your insights could highlight what the market is really feeling.
Let's explore Bitcoin's recent recovery. George Tung brings us insights on current market trends and reflections on predictions from over a year ago.
Absolutely. George has a track record of engaging discussions around cryptocurrency, and his analyses are always backed by solid fundamentals. Today's topic is packed with valuable lessons.
So, what's the core message from today's analysis?
The main thesis is that while Bitcoin has faced recent ups and downs, historical trends suggest a strong recovery is on the horizon as macro conditions shift.
What can you tell us about Bitcoin's recent recovery?
Bitcoin's bounce from $55,000 to $58,000 showcases a typical recovery pattern, but caution remains due to potential volatility ahead.
Interesting twist. How does the economic situation affect Bitcoin?
The latest job readings show a sharp decline, forcing the Fed to consider aggressive rate cuts, putting pressure on current market conditions.
And what about institutional involvement in Bitcoin?
Absolutely. Major institutions like BlackRock and Morgan Stanley are holding significant Bitcoin positions, which supports rising demand and prices.
Now, how should investors approach these fluctuating markets?
Dollar cost averaging is vital. History shows that holding during volatility leads to eventual gains. It's crucial not to panic.
And what's the outlook for the rest of the year?
Predictions suggest a significant recovery starting in late 2023, echoing patterns from previous bull runs.
Let's talk predictions. What should we expect regarding rate cuts?
Rate cuts from the Fed could provide much-needed liquidity, sparking optimism and potential upward price movement for Bitcoin.
October is approaching. What's the scoop?
October has historically been a strong month for cryptocurrencies. Previous years show gains ranging from 28 to 50%.
Wrapping it up, what are the concluding thoughts?
George emphasizes the importance of holding and strategic investing. With growing institutional support, Bitcoin's future appears promising, despite short-term volatility.
As we finalize this discussion, we want to hear from you. How are you planning to navigate these cryptocurrency waters?
Drop your strategies in the comments. Let's see how everyone else is gearing up for potential bullish tides ahead.
Was yesterday's wild market sell-off just hot air, or is there something more lurking below the surface? Let's dive right in.
Absolutely. Today's focus is on the shocking Nvidia story. What does it mean for Bitcoin and the altcoin markets? The stakes couldn't be higher.
So what's the crux of the Nvidia debacle?
Nvidia claimed they hadn't received any subpoenas from the DOJ, meaning that the massive sell-off, losing $280 billion in minutes, was based on potentially misleading information.
What else can you tell us about Nvidia's market impact?
The scale of the sell-off was shocking. $280 billion vanished in minutes. Some suspect stock manipulation, especially considering Nancy Pelosi's track record of trading profits.
And what's Bitcoin's condition amidst all this chaos?
Despite the stock market being just 2% off its all-time highs, Bitcoin is languishing about 20% lower. We've got critical resistance at $62,000 that we must overcome.
How do the macro landscapes affect crypto?
The pattern is clear. When equities rise, crypto markets can benefit. But at the first hint of bad news, prices tumble. Yield curve inversions are keeping investors on edge.
Unemployment data is looming. What might we expect?
If the unemployment rate rises significantly, say to 5%, the market could react poorly. Keeping an eye on that data is crucial.
Investor sentiment seems shaky right now.
Indeed, there's a lot of frustration in the market. Investors are hoping for a solid breakout to restore confidence.
What do the charts say about Bitcoin's future?
There's speculation that if Bitcoin breaks above the essential $62,000 resistance, we might see a rapid price jump, perhaps even nearing $100,000 by year's end.
What about overall market volatility?
With so many macro factors at play, prepare for wild price swings. This market is anything but stable right now.
To summarize, what's the takeaway for crypto investors out there?
Navigating these turbulent waters requires patience and strategy. The market may flip at any moment. Stay informed and ready for potential breakouts.
And finally, with all this chaos, how are you planning to position your investments?
We want to hear from you. Share your strategies and let's unite our insights to conquer this market together.
In today's episode, we're diving deep into the recent turmoil in the crypto market. Over $1 trillion just wiped out. The question on everyone's lips, is the crypto bull run really canceled?
Indeed, the scene is set for a potential collapse reminiscent of the dot-com bubble. With Bitcoin currently at $56,000 and altcoins wrecked, it's going to be an intense discussion.
What's at the heart of this issue? What sparked this crypto crisis?
The catalyst was Nvidia's troubles with the Department of Justice over antitrust practices, leading to the largest one-day loss in market history. A ripple effect that has serious implications for crypto is starting to unfold.
Let's talk about Nvidia's immense sway. What's the scoop?
Nvidia's drop wasn't just a stock issue. It raised fears across tech and crypto markets alike, as it accounted for significant portions of market returns.
So, how does this tie back to the tech bubble?
Like in the 2000s, the signs of over-concentration and excessive investment without substantial tech backing raise alarms for crypto. It's an echo of history that we shouldn't ignore.
Interesting. What's happening with the Japanese market?
The yen cash and carry trade is at risk. If investors start liquidating positions due to falling crypto prices, it could create a broader market crisis.
Navigating through these waters requires some serious strategy. What should traders do?
Now isn't the time for leveraged trading. It's about surviving the dip and preparing for the eventual rise when the market turns around.
Let's talk about the long game. What does the future hold now?
If corrections are done right, opportunities are expected to emerge. Building solid community engagement will always be key in this evolving landscape.
What are experts saying about future price actions?
Predictions indicate that after the current shakeup, we could see stabilization if the market effectively recalibrates.
Any regulatory insights from all this?
Absolutely. Regulatory actions may hamper innovation, but could also pave the way for a healthier market structure.
So, ultimate thoughts as we wrap up.
It's crucial that investors adapt now. Surviving this dip while staying alert for the next potential bull run is the name of the game.
Time to navigate the currents of today's discussion. We're diving into Bitcoin ETFs, who's buying them, and what it means for Bitcoin's price.
Let's get straight to the facts. The approval of Bitcoin ETFs has significantly shifted the crypto market dynamics, attracting massive institutional interest.
So what's the core thesis behind this ETF wave?
The approval has created a crucial bridge between traditional finance and crypto, allowing institutional investments to pour in without needing to manage Bitcoin directly.
Wow, what about the initial market reaction?
Incredible, isn't it? The first ETF topped all others with massive trading volumes, proving the appetite for Bitcoin among institutional investors.
And who's jumping on board the ETF train?
A lot of big players. Institutions are lining up to invest, which indicates serious optimism for Bitcoin's future.
What about those price fluctuations? Are they concerning?
It's a give-and-take situation. Institutional money has mostly been flowing in, so while swings happen, the trend remains positive overall.
Impressive adoption rates. How does Bitcoin compare to other ETFs?
Quickly becoming the most adopted ETF in history. Institutional interest is outpacing all others, signaling a potential long-term trend.
So, what's on the horizon for these ETFs?
With upcoming Ethereum ETFs and other altcoin potential, we could very well see record highs in the crypto market once again.
What do the experts see ahead regarding institutional adoption?
If these trends continue, we could see mainstream acceptance for cryptocurrency, breeding confidence for new investors as well.
And what about the role of upcoming regulations?
Yes, depending on who gets elected, we might see either a flourishing or troubled environment for crypto ETFs.
What are the big takeaways from this ETF saga?
Spot Bitcoin ETFs have revolutionized crypto engagement for institutions, pointing to a brighter future for many digital assets.
Any parting thoughts on altcoin ETFs?
That's where the excitement lies. Should momentum favor Bitcoin and Ethereum, we might just see a wave of altcoins following suit.
As we wrap up our discussion on the dynamic world of cryptocurrencies, it's clear we're navigating through some turbulent waters.
Indeed, Kamala Harris's proposed regulations could either stabilize the market or create further uncertainty for Bitcoin and its followers.
And George Tung remains hopeful, suggesting that Bitcoin's recovery is right around the corner, but only if institutional interest stays strong.
On the flip side, the Nvidia experts highlighted significant sell-off challenges that cast doubt on that optimism.
It's a mixed bag indeed, but as seen with institutional investors favoring Bitcoin ETFs, there's potential for higher price points.
We appreciate your engagement today. If you've gained valuable insights from our discussion, don't forget to like, subscribe, and hit the bell icon for more updates.
Thanks for joining us, and don't miss our other videos where we continue bridging financial insights with expert commentary.